Today, we're looking at what Nvidia can teach us about markets and fundamentals, and what we can take from that and extrapolate out to other markets and understandings of how things can work. And then on the Trading Takeout, we're going to be looking at whether we should use anecdotes in our investing strategy. Make sure you like this video and subscribe to the channel to ensure that I'm in your YouTube feed every single day, giving you the best market commentary, trading tips, and investment ideas to be able to improve your trading edge. Here's something super interesting. So in front of us, we've got Nvidia and Nvidia's price to earnings ratio. And let's just run through quickly what's happened just recently with Nvidia. Over the last 2 months, it's gone from about $500 all the way up to $721, which is approximately, if we want to measure this out, a move of 45%. So let's call it 45% there. Crazy for a year-to-date return in a mega cap tech stock. Like, that is unbelievable. But this is the most interesting part for me down here, the price to earnings ratio. So back here in 2023 June, so about 7 months ago now, the price to earnings ratio was up at 215. This means that the price of the shares then were 215 times Nvidia's earnings. That is, quite frankly, astounding. Okay. There was a drop off, okay, where we saw this drop off here, just price decreased a little bit. And this is roughly when the AI boom really took off. But then this is something really, really interesting. Even though they're earning way, way more, and the price is even though the price is way higher now, the price to earnings ratio is far, far lower. It's only at about 95, I believe, 95.5. And so the way that we need to try and think of this is that whenever people, and you hear the media or you hear on social media, you hear your mates talking about something being overvalued or overbought, you have to stop and think to yourself, but what is going on in reality? Like, is there a shift occurring, meaning that there's a new regime that's starting? Is this the start of some sort of, or is this the infancy of a new turn? And it seems like AI is the real narrative that is going on right now. And I think there's coming an extension to AI as well. We've got AGI that is sort of coming next, that Sam Altman, the CEO of OpenAI, he wants to raise $7 trillion for, which is absolutely insane. But then there's quantum computing after that. And I think that's about 5 to 10 years off. But we can see Nvidia and some of the chip companies just keep going up. Now, I wouldn't be surprised if there were to be a share split pretty soon, because we're approaching, $750 per share now on Nvidia. I think to attract more retail punters, you're going to have to split at least maybe, let's say, 5-to-1 split, But I don't see any reason for it not to keep going up, especially if you look at the prior price to earnings ratio. Okay. So the prior price to earnings ratio was, let's call it 218. Insane. So it's basically over half what it is now. It's double what it is now, over double what it is now. So there's still a lot of room based on what the market has printed previously for that to keep going. And at the moment, we're in very much a momentum-based market. If you look on a shorter time frame, it's just running away with things, So the way that I would look at this now is that, and take this sort of lesson from it, is overbought is just a consideration on how fast the move has gone and what the prior prices look like. It's not a reflection of the future. Overbought could simply just be on a period of the last 100 days, okay? Or it could just be based on prior revenues. It could be based on anything before, but it's a bit like technical analysis, right? You're only looking at prior data. you don't know where the market might end up being in price discovery mode, which is, at the end of the day, a different term for just rallying its arse off. But we have to really consider this, because that is where the real money is made, in the strong, strong rallies and the strong trended markets. You've got to love rallies. You've got to love bubbles. You've got to learn to grasp onto them, because without grasping onto the bubbles, it just means you're going to be pessimistic all the time. We are traders and investors, okay? We aren't emotionally invested in things. We look for the narrative, we look for the setup, and we hope it goes on and on and on and on until the market says to us, no, we need to get out of that now. And hopefully we get out of that based on an objective measure, whether it's a monthly expected move to the downside, whether it's a daily expected move, it doesn't matter. But always look for the objectivity to get out when the move goes against you. Do not try and guess where the market is going to stop. Today's Trading Takeout is based on why it's good to use anecdotes when you're coming up with an investment thesis or trading idea or something like that. I'm going to kick it off with a story. So there's a guy that I met once who he was a fairly good investment manager, and he was a really, really strongly principled guy in terms of how he would come up with his investment ideas. He's a portfolio manager, and one of his ideas was to do with the food industry and to judge which supermarket was the best one to buy at a relatively good time. What he did was he went in and bought an own brand packet of sweets. Okay, so whether it was Sainsbury's, Tesco, or I can't remember which ones it was that he might have gone for, but he bought some sweets from a supermarket. He then wrote into the supermarket after having counted which groupings, so say they were like wine gums or something like that. He would count out how many wine gums of each color were in each pack, and then say, here's evidence that there are fewer wine gums in this pack and whatever. Basically, he was saying that the sweets in the packets were unequal. And he only did this because it's such a stupid thing to send in a complaint over. But he wanted to know which firm would actually reply with a person rather than an automated email. Okay. And the reason why he wanted to do this was because he thought that the firm which replied and would have an actual conversation with him via an actual person would have the capability to pay for labor that would support such a spurious question. And so he'd buy the shares of that supermarket. Anecdotes like that can really, really work seriously well. It's not scientific at all, but these are good ways to sort of train your brain on how to think of the market and how to think of trading ideas.